Well, happy Tuesday. Thanks for joining us and jumping in here for your Turnaround Tuesday. We're back again for another episode. So welcome to EmpowerAg Trading Turnaround Tuesday. It looks more like a turnaround about 30 minutes to an hour ago than it does right now. Let's jump into your markets and we'll quote things up here for you. Hang on a sec. All right, D's corn is relatively flat, up a half a cent, 446.5. Nove beans are down 3 cents at 1132.5. July KC wheat up 4.5 at 634.25. Chicago wheat is up 3.25 at 586.5. Looking at your feeder cattle market, we got feeders up $2 to $3 across the board there. Fat cattle up $1.20 to $1.90 in your August. Macro markets, that's where we're having a little bit of a meltdown. We've got the Dow down 300 points, the S&P down 112, and the NASDAQ rolling over down almost 900 points, 850 points at the moment, right around 3%. Crude oil's been trading all over the place. We got a high of 91.55 and a low of 85.95, currently trading around $87 a barrel, down about 4% there on your crude markets. So a lot of market pieces moving in your markets. And yeah, let's talk about them. I'm going to bring in my guest here. You know him. We love him. Mr. Connor B. Back again. How are you doing, Connor?
I'm doing good. Had to move some stuff, so I apologize for the blinding light behind me. But
at least, at least we know you're not in your mom's basement there. We're in the upper floor, right?
Exactly. Good. And hey, you were quoting, maybe some breaking news. You were quoting up crude oil. We did see President Trump put a True Social post, I think it was about 5-10 minutes ago, about potential retaliation to Iran attacking some Apache helicopters. So we saw crude oil jumped up pretty good. It's kind of settling back down. Corn was up about 3-4 cents. I'm going to credit it to that type of news. Now we're like, as you said, we're about unchanged. So that was the recent news, and that's how fast these things move, right? It feels like we've already digested it and we moved on. And I think it was only 10 minutes ago. Maybe it was 15 by now, but it was quick.
Right. Yeah, that can happen fast. And if you're trading headlines, they don't tend to age very well, it seems like, in this environment, because they just change so quick. And I think we're all sick of the war headlines and the dynamic that's going on over there, but it just seems to be this back and forth and this problem that just won't go away. And we're 2 weeks from the next 2 weeks, I guess. It certainly feels like.
Yeah. And if you want to be, what's frustrating in our space is that I see crude oil at 88 and 90. Last week it was at 95, right? That's from pre-war levels in the 60s up to 90. And then we've got corn that didn't make any kind of move like that, right? 2 weeks ago we were at $5 corn. We're last time we did this show, we're feels like we're further and further away from that number, but
yeah, just a free fall. 506 a couple weeks ago, and here we are, 441. So that brings us into our question of the day, I guess, that I have. Is this a dead cat bounce, or did we just find a bottom in the corn market? I want to know what you think, and I guess if you have an opinion, leave us a comment below and let us know what you think. It certainly looked more like a bottom a few hours ago than it does right now. You look at the chart and look at things, and it looks a little questionable right now.
Yeah.
Go ahead.
Oh, I was just going to say, what caused this move and what went for it is that we've got a weather forecast that did not scare any of the funds, right? Number one, we had a fund position that decided they really wanted to get out of this market, and they did so. We saw that on the COT report Friday. And then the other one is we had all these moving averages. We dipped below the 200-day. It felt like one fell. It was like dominoes, right? First, it was July corn. Then we saw December corn. Then we saw July beans. We still got November beans holding up above that 200-day. And that's the environment we get in there. And so then the the other thing, maybe for the bulls watching, it gets a little negative. Brady, doesn't feel like we put the low in June very often, right? And so that's the other thing I'll put in mind. I don't know where we go from here, but for anyone saying that the lows are in, well, history says we don't put them in June very often.
Right. Yeah. A lot of weather ahead of this crop. We're early stages of development. And some of it's, we're getting some of it out of the ground, but it's not even fully emerged and fully planted across the Corn Belt quite yet. We're getting there, but a lot of weather ahead of the market. So here's a snapshot of the Dees corn chart, looking at that free fall from 506.5 high on May 13th, down trading 441, think yesterday night, and pretty nasty. So would like to believe that 445 area is some support. I want it to believe that. I'd like to see us go test that red line. That's a 200-day moving average that you talked about. We just broke that, and everything kind of faded when we broke that. Yeah. Crop conditions. I'm going to jump back to that slide real quick. Kind of came in on the low end of the range. Corn conditions 67%. Looks like this is a tweet from Karen Braun, great graphic, and sums it up all really well in one big snapshot. Any takeaways on your part from a crop conditions?
Yeah, it's one of those that were, below the 5-year average. We were a little bit on the low end. And so again, if you're a bull in this market, you're going to be frustrated saying, how come we're not rallying based on these crop conditions that we've seen? I'd say number one, anyone that's a professional trader, they're not looking at crop conditions, right? It's a good benchmark. It's what we compare to previous years. We're looking at we're at the time frame where we're looking at the extended forecast, and so it's going to be something to watch. Where's the conditions going to go from here, right? The weather looks good. Some people, there's chatter that this crop wasn't planted in the most ideal of conditions, and maybe the crop conditions reflect that, but we've got a long way to go, and it's definitely doesn't look threatening to me when I look at conditions where they are.
Right. Yeah. So we'll see. It's early. Yeah, way too early. And we've seen years past where crop conditions didn't even match what the USDA did with yields. So it's, how much weight do you put in them and how much merit do you put in them? Right now, not a whole lot, but no problems, no major problems. Here's a great social media post that Eric Snodgrass had last week. Really like it. Be careful how much you read into these long-term forecasts. He highlighted last year's summer model performance, looking at the July, September weather and what actually transpired in July, September across the U.S., and just two completely different maps there. So any long-term forecast that we're looking at right now, take it with a grain of salt, the bottom line, because it doesn't exactly always line up like you think it should.
That's exactly right. We the long-term forecasts are about as accurate as our long-term price forecasts. There's so many variables. But have you been hearing the chatter right now? Is this El Nino? And I've heard, how many different terms have you had for what they're calling this El Nino and how wet it's going to be? I've heard super El Nino. I heard one. This might be a new one to you. Someone used the term Godzilla El Nino.
Boy, that is a new one to me, Connor. Godzilla El Nino, is that on the table? That sounds kind of scary and dicey.
From everything I've seen, if we're looking at La Nina, El Ninos, all we need to be concerned is that the forecast look like it's going to be an El Nino. It looks like it's going to be wet for the Corn Belt. Could that change? To your point, absolutely, it could.
Right. Yeah. Weather model is going to change. Market's going to change. And when we think about change, think about markets, think about market volatility and the movement of prices. And, relative, looking at the CME's corn CVol index here, not crazy volatility, little upticks from what we've seen, I guess, last fall winter timeframe. But you go back and look at the years like 23, 22, 21 timeframe, really still pretty low volatility when we look at these options right now.
Right. It's amazing to look at. It's where even if you put into perspective the past 60 days of volatility, where it feels like we finally added some, in the grand scheme of things, we're still low.
Right. True. Jumping over, looking at just the price range of D's corn since the first of the year, we've seen about a 65-cent range, 506 down to 441, that recent low. And last year we saw an 81-cent range. You look at the 5-year average and 15-year average for this price range in the calendar year, January 1st to first notice day, and the average is right around that $1.60 level. We had some really big years of $2 plus ranges in this corn market back in 22, 23, 21 timeframe. I don't know if we have that type of level in store. It takes something pretty big to make that happen, but certainly wouldn't want to stand in front of a market that has a potential to move that way in that manner going forward, Connor.
Right. Absolutely. It's one of those that I'm one of the guys that I don't like betting against volatility, right? We'll have the low volatility years, the 17, 18. If you look at that chart, the past couple of years have been the same, but my gosh, when the volatility comes back, it sure comes back fast.
Yeah, yeah. I think in this environment, picking up pennies in front of that with that low volatility, selling options, just not a great environment to be doing that in, because that can change in a hurry, and you get ran over really quick. So be careful with that, I guess. And I, to me, I guess my thoughts in this market right now is the sentiment changes quite a bit, and we go from uber bullish to uber bearish, and don't get married to one opinion too quickly, because it can change fast. So
Absolutely.
yeah, where do you want to go from here, Connor? I can talk about cattle and screwworm, and we can wrap things up if you'd like.
Yeah, let's do a little cattle screw 'em. I mean, grains. If in your first question is, did we find a bottom? It feels like we are stabilizing a little bit down here. But the other thing I'd keep in mind is we do have a WASDE report out Thursday, and so it's one that could certainly move the market. But to me, and I think you'd echo the same, is that the June 30th, that's going to be the big one, right? That's one of the ones that if I had to count the important USDA reports on one hand, that June 30th is going to be one of them. It's going to be our first look at acres. And when I think of, let's say this weather stabilizes, holds, we have a trend line yield crop, right? We get to where we're kind of running out of bullish cards, and that's going to be the last one, is where are we going to see corn acres come in at?
Yep, definitely. Those are big reports coming up. Yeah. Connor, you say that, it's funny to me because it seems like often in our industry, in our business, we are always looking at, this is the biggest report of the year coming up, right? It's the pre-plant report, it's the January report, it's the June acreage report, and these are big reports. But it's funny to me that sometimes this is the biggest report of the year, and they can't, any one of them can be. But then there's the outside tweet, from Trump that moves the market $1 in a day too. That was
Right.
on nobody's radar as well.
Absolutely.
So
I go back to me, if we're going through the crop year, it's going to be the first one in January, right? It's going to be the
right.
final yield on the old crop is the big one. I look at and the March acreage intentions, and maybe the actual report isn't big, but the timing of it, where we have crop insurance set and then we're leading into it, that's a big one for me. Then I look at this June 30th, and then the other one's going to be July or August WASDE, where we could potentially really change yield based on it. That's my opinion. I'm probably missing one in there, but those are the ones I look at.
That August WASD one has been a history of just being like just a knife in the corn in these markets at times. It's over the past few years. But the June acreage report can really, and the grain stocks report there too. And then you roll into the 4th of July holiday. You can go through a period there where you have these all this information and like 3 or 4 trading days to trade it, because the market's closed for Friday and Monday on each of those weeks afterwards. And then an important weather time frame as well for the Corn Belt too.
It's funny. So I believe July 4th is on a Saturday. So I think the 3rd we're closed. So June 30th will be on Tuesday, and then we'll have 2 trading days. So to your point, that's kind of that situation.
Right. Yeah. So we'll see what unfolds here, and I guess don't get married to a bias too strongly right now. I hope we bottomed out here. So I'm going to talk a little bit of cattle here, and then we'll get out of here and roll. So looking at your feeder cattle market, feeders have definitely sold off, digested the screwworm headlines pretty well, retraced half of the sell-off, but funds have just kind of been fleeing to the exits here, and they need some confidence to jump in this market and get going again. So I think when you look at a chart, October, the 336 level looks like an important level to hold here. Otherwise, I think you can go down and test the recent lows we saw last week, that screwworm low. We'll see. Fundamentals haven't changed too much in this market. And is the screwworm, is it bullish or bearish? I don't know. There's a case to be made on both points, but it does, if you quarantine supply and tighten supply up, that certainly makes feeders more of a premium, in my opinion. Looking at the feeder cattle index, 367 is the most recent print. That'll change here today. A year ago, I highlight these areas on the chart. 310 on the feeder cattle index 1 year ago, and 2 years ago, 250. So despite the pullback, you look at these board prices out there in October at 347 right now, we're still well above where that index was a year ago. And if you're doing any sort of risk management, it's likely much better than where you started a year ago, and definitely better than where it was 2 years ago. So don't be afraid in this market, despite the recent sell-off, to go out there and protect prices. I think the cow-calf guy is sitting in a really good spot. Those guys, it's the backgrounders, the guys who are buying 6, 7, 8 weights, spending $2,500, $3,000 for those animals, tying up some equity. Maybe they're borrowing the equity, putting some feed in them, and they're taking on a lot of risk and betting on the market to come, which is paid off for them over the course of time. But there's going to be a point in time where maybe this market doesn't come back, and that's kind of scary. I got a snapshot of the screwworm map and data here, highlighting where those cases were reported. The most recent one was another one in Texas. I think we're at 5 cases right now of screwworm, and this is just going to continue to intensify. They're going to find more of it. I hope not. I hope it's quickly resolved, but as there's more awareness out there, it just feels like the narrative is that they want to find it in more places. But yeah. The nice thing about being in Kansas, though, we will have a winter, and flies eventually, most of them die in winter. But yeah, we'll see how this thing grows here. It just feels like there's a lot of testing, a lot of awareness out there, and we'll see if there's more reports of it as we progress here. So.
Right, and yeah, to your question about the screwworm, right, bullish or bearish, the trade was kind of figuring that out when we got that first case.
Right. Yeah. Nice response in the market. I mean, we flushed lower, but then we sure had a strong day there and kind of got past the news. Thank goodness.
Right.
All right, Connor B. I'm ready to roll out of here if you are. Got anything else?
Nope. We're good. Thanks for having me. We'll see what next week brings.
Okay. Have a good rest of your week. Thanks for being here, and we'll see y'all next time. Later.
Yep.